Hey guys, welcome back. In today's video, we are talking about why AMC will have a 300% plus jump, how the shorts are crashing, the 400% margin maintenance requirement, and many more in this video. First, we're taking a look at this. It's been 17 months since AMC hit all-time low at 265. Soon after, the share price increased, culminating in a 300% jump in a single day following heavy media bashing. Since then, AMC finances and box office number radically improved, while share prices again back down close to all-time low. So once again, when we use data, we understand what has happened with AMC in the past. And we've known that typically when AMC gets to these levels, what you will tend to see is large amounts of capital, large amount of volume start to come in. And the last time we saw this, we saw AMC jump over 300%. Now, this time, a lot has obviously changed. Firstly, when you take a look at the fundamentals of AMC, we are in a way better place now than we were 17 months ago. And what that is obviously going to do is it's going to attract even more capital than last time AMC did. So that itself is already showing why AMC will surpass what we did last time. But furthermore, you have to understand there are plenty of other factors to include as well, such as the amount of synthetics that has been created since we saw the jump last time. Now, we've seen in the past, we've seen from the data, just how many synthetics can be created in a single day. And so you understand that when it comes to a time where a lot of pressure is then put in, whether it's these swaps that are expiring, whether it's synthetics that needs to be covered, that will all aid in terms of how AMC will increase in price. And so we can expect the volume to be even greater this time. Of course, there are then even more factors to include, such as the shorts does not have the same liquidity they did previously. Right now, what we are seeing is how shorts are facing illiquidity issues. We've seen the reverse repo going down, which we'll talk briefly about it later on. We've seen how shorts have been at the brink of margin calls. We're seeing how brokers are worrying. And so you can understand why AMC is in an even better position. Not to mention, on top of all of this, we also have recently GME applying pressure towards the short sellers. And so this is why I believe that we are going to be seeing AMC have that massive bounce, and it's going to be greater than last time. The only thing we have to obviously look out for is when AMC does jump 300% in a day, how many halts are they going to hit us with to stop that momentum, to allow these short sellers to try and get away again. You can even see that even as of right now, we're seeing AMC up 3% for the day, but this was met with the fact we saw AMC having a 70% dark pool. And this was just briefly into the market open. And so you can already understand just what they're doing in order to suppress and control the price, but also why we said that they are struggling to do so, why we said that the jump is going to be even higher. Because the fact that AMC is still able to go up, and at this time screenshot, 2%, despite having a 70% dark pool, it just shows you what the sentiment is like for AMC. It just shows you how strong the apes are and how much the institutions are willing to accumulate. And for the short sellers, no matter how much they try and suppress AMC, they know that at times like this, even if they're creating millions of synthetics, even if they're abusing the dark pool, they're still not able to take that momentum away from us. And that's why we've said we are at a stronger position than ever. And it's why we know when we do have that volume coming in, when we are seeing AMC increasing in price, it's going to be massive. And so this is why we've said there's plenty of data that's showing us why AMC will have a not only just a 300% jump, but even higher than that. And you can also see on the sell walls. So firstly, we've just talked about the dark pool. These are tactics they use to suppress AMC. Now we're seeing the sell walls, once again, another tactic used to suppress AMC of where we are seeing at here. We've seen the spoofing, we've seen the sell walls, and this is at times where, and at time of this screenshot, AMC is up 3.38%. And this is all just to show how strong AMC is. We are met with constant suppression, constant manipulation. Once again, the list just doesn't stop. We can just name a few off the top. We talked about synthetics, FTDs, swaps, dark pool, sell walls. There are so much more that we've not yet to mention, but you can see despite everything they're doing, AMC is still pushing strong. And I think for us, That's the most important thing because it shows us what the sentiment is truly like for AMC. It allows us to understand that when AMC is going down, there's a difference between the investors selling versus the institutions manipulating. And in this case, we understand that even with the manipulation, the apes are powering through. The apes are applying pressure towards these short sellers, and that's ultimately how we are going to beat these institutions. And it's why we talked about that these institutions are all facing liquidity issues. Again, taking a look, Fed reverse repo usage by mutual fund has crashed today to 16 billion. This is a stark contrast to the 2022 height of 2.55 trillion. So one of the things on this channel that we always focus on is the reverse repo. What the reverse repo is, like we've said, it's an easy access to liquidity. It's how these short sellers were able to get their hands on money in the first place to suppress AMC. Like we've just shown here, 2022, it reached a high of 2.55 trillion. And so it's why we always say it's only $16 billion. Yes, $16 billion is of course a lot of money. But when you compare it with 2.55 trillion, you understand just how much money has evaporated. And so we've said that this is a slowly ticking down time bomb because they are not able to get hands on the money like they did. They're not able, firstly, it's becoming more and more difficult for them to get any sort of liquidity. And secondly, when they do get liquidity, they're not getting as nearly as much as what they did in the past. And so you can see how this is all proving to be a struggle for the short. It's why they're reverting to all these other strategies that we've seen, why they're using dark pool. So as opposed to spending billions of dollars to suppress AMC by creating, the billions of synthetics, by taking up billions of short positions, they're obviously using dark pool to take away the buy orders. But even by doing so, there's always going to be buys. The buys, despite the fact being hidden, there is still going to be some that come through, and that's still going to overpower the selling, because at the end of the day, the selling for AMC is very, very minimal. When you take a look at what the apes are doing, and we've seen that very likely that 85% are buying and only 15% are selling. And even then, for the 15% they are selling, they're selling very, very low amount, because the ones who have accumulated and diamond handed are obviously not going to sell their shares. And the ones who are selling maybe only had hands on maybe 1 share, 2 shares, 5 shares, or at least a very minimal amount. And so this is why we've seen the short sellers struggling with liquidity. And then you can also see here, record-breaking 400% short selling maintenance requirement for Genius Group. Now, Genius Group is something that we've talked about recently in terms of the lawsuit they want to take, in terms of exposing the naked shorting. And now from here, you can already see what's wrong with the short sellers. So Genius Group, like I said, are trying to tackle the naked short selling problems. And we can see with a firm that's being naked shorted, their maintenance requirement is suddenly 400%. So you can understand that when these short sellers are trying to naked short a company, they are put on immense pressure by these margin requirements. It's why they need to borrow more money. It's because they need it just solely for the margin requirement. And now, for Genius Group, a company that is smaller than AMC, that's smaller than GME, a company that's obviously faced less synthetics abusement from these short sellers, because AMC and GME has been ongoing for a very long time, is seeing billions of synthetics. Genius Group obviously in the same situation, but just not as big. And so for a stock like Genius Group to see that they need a 400% short selling maintenance requirement, you can just imagine what it's like for AMC, what it's like for GME. And like we talked about, at the end of the day, these all means that these short sellers need to get their hands on money, whether it's for Genius Group, GME, or AMC. And so if they already need this much just for Genius Group, you can understand the difficulty it is for them to get hands on money for AMC and for GME. And so it's why we've said, with the reverse repo going down, with how we're seeing the market operating, with how we're seeing these short sellers failing to get loans, failing to get extra spare capital, these are all proving to be difficulties for the short sellers. And another thing, the cherry on top, you can see the moment we've all been waiting for, how the Fed cuts and Bank of Japan hikes could finally break the yen carry trade. And now this is something we've talked about in the past before. Like I said, I don't want to bore you guys with things we've always said on this channel, but essentially what we talked about was the focus on this and how it can easily blow up multiple positions from multiple different institutions. One of which, of course, being Citadel. And so you can see how if we're going to be looking at how certain positions can cause massive turbulence for the capitals of institutions like Citadel, where that's going to put even more stress on their capital, and our focus of this video is talking about maintenance and capital requirement, you can understand why these are all counting down for the squeeze for the breakout of AMC. As always, none of this is ever financial advice, so do take what I say so much to do your own due diligence and research, and I'll catch you guys next time.